You're welcome to another edition of Optimizing Opportunities in the Ethiopian Banking Sector on Armourgate Radio Communications. I'm your anchor, Abiodun Abari, and thanks for joining me. Last time, we attempted to lay a foundation for optimized surgeon into the world of Ethiopian banking, and we tried to understand the justification for the big government coloration and manifestation of the Ethiopian economy. Yes, how large military budgets needed to fend off the European invasion must have influenced the desire for government to do more business, to engage in more economic activities in order to attain adequate and sufficient economic muscle to satisfy defense needs and get more involved in the lives of the citizenry. So, the dominance of the Ethiopian government in especially the service sector is reflected in banking, and this is transitioning. Yes, we prefer to refer to Ethiopia as a developmental state in the geopolitical context, okay? And the desirability and attractiveness of government benevolence, government spending, of government's intervention, of government involvement in critical sectors of the economy, in income distribution, in subsidies, grants, social interventions, and all that connotes big spending. It's not lost on us. Now that desirability, that attractiveness is not lost on us. And of course, the consequences, the reality of government spending. We talk about deficits, debts, high taxes, and attendant inflation, and of course, macroeconomic imbalance. And so you might just have the economy spiraling out of control. So the crucial need to combat spiraling inflation with the government making remarkable progress in recent years, and address the debt burden, so that a move for investment-driven fiscal policy can be actualized, right? So funds can be freed up to pursue investment during the fiscal policy. Okay, and you understand that yes, agriculture being the mainstay of the Ethiopian economy, and agriculture talk in terms of coffee, the major export products, and of course other cereals and crops and livestock, and to also talk about manufacturing. Manufacturing talks about textile and leather production, and of course agro-processing, the process of agricultural products into finished products, talking about adding value, and of course mining gold, gemstones, and other industrial minerals, and tourism where the government is really seeking to achieve competitiveness, okay, and because of the cultural heritage that Ethiopia has, having quite a number of historical monuments and places of interests, okay. And the service sector, of course, talk about telecoms, transportation, in terms of aviation, and the popular Ethiopian and finance industry, talking about banking, where we have focus, talking about the reforms, okay, and the dominance of government in these key sectors is something that is being reformed. Talking about the transitioning, right, in the banking sector, all right. Of course, we understand that finance is the lifeblood of any economy. So the sustainability of the current system of government dominance is being called to question, and the adoption of structural reforms to correct macroeconomic imbalances is just the way to go. So that needs to attain competitiveness in key sectors like tourism too, and you have that transitioning to a more market dictated system by prioritizing government-owned enterprises, cutting regulations, cutting red tape, and opening up sectors for private sector involvement, and also foreign investors is just the way to go. So to engender private sector driven growth, there should be less restrictive structures. I mean, that needs to deregulate in order to incentivize economic participation. Private sector savings can be galvanized for investments, so the economy can be expanded enough to accommodate as many as are able and willing to engage. And of course, foreign direct investments can really play a big part in achieving these transition objectives of the Ethiopian government. Okay, so the targeted growth of government can be achieved with the aid of foreign direct investment, especially in tourism and of course manufacturing and banking, which we are actually focusing on. And yes, we have started to look at the banking proclamation issued by the National Bank of Ethiopia in December 2024, which I like to refer as the game changer in the banking industry in Ethiopia. Because the importance of banks in achieving economic development through the mobilization of funds and funneling of same funds to other critical sectors of the economy, and of course the role of the banks in the payment and settlement system in the Ethiopian economy. So it's very important that the NBE, National Bank of Ethiopia, has adequate authority to deliver its responsibility of ensuring that the failure of any bank does not significantly disrupt or negatively impact the financial system. Okay, so that ability to insulate the system from any disruption when the bank is no longer viable is very, very important, because if it's not well managed, it can actually lead to the instability of the entire financial system and the of course the macro economy, which can greatly affect the government and the people of Ethiopia at their great cost, both economic and non-economic. Okay, so the responsibility to continuously ensure the safety, the soundness, and stability of the banking business. Okay, that by adequately frameworking to accommodate the current and emerging developments and trends in the sector. So you understand that the aim of the legal and regulatory framework for the opening of the banking sector for foreign investment is to actually positively impact the competitiveness and the efficiency of the banking sector. So you understand that the National Bank of Ethiopia has to license the branches and subsidiaries of foreign banks, okay, and foreign banks also can create representative offices or just invest in existing or new Ethiopian banks. Okay, so a foreign bank which is well established, reputable and financially sound may be allowed to establish partially or fully owned foreign bank subsidiary, or open a foreign bank branch or a representative office, or acquire shares of a bank. And foreign nationals other than foreign banks and foreign owned Ethiopian organizations may also acquire shares in banks. Okay, and direct shareholdings by a strategic investor in an existing or a new domestic bank shall be limited to 40% of total subscribed shares of a bank, and such holding by a non-strategic foreign national investor and foreign judicial person shall be limited to 7% and 10% of subscribed shares of a bank respectively. And aggregate shareholdings by foreign nationals and foreign owned Ethiopian organizations in the bank shall be limited to 49% of the total subscribed shares of the bank. And in rescuing a distressed bank and ensuring financial stability, and of course subject to some special conditions, exceptional approval may be granted to well-established banks for the partial or full acquisition of existing domestic banks, okay, for the purpose of rescuing a distressed bank and ensuring the stability of the entire financial system. And of course, foreign nationals and foreign-owned Ethiopian organizations shall invest in the bank through foreign direct investment in foreign currency. And foreign-owned Ethiopian organizations, partially owned by foreign nationals, may invest according to aggregate percentage shareholding by foreign nationals through foreign direct investment in foreign currency. And the dividend earnings at the end of every financial year may be reinvested in Ethiopian birr by foreign nationals and foreign-owned Ethiopian organizations, given foreign ownership is within the aggregate and individual shareholding limit. Okay, and dividends earned from investment by foreign nationals in the bank and salaries of foreign national employees and proceeds from sales of shares or liquidation of a bank may be repatriated as per the provisions of the National Bank Directive and other pertinent laws. And you also have that foreign-owned Ethiopian organizations are fully or partially owned by foreign nationals may repatriate any proceeds in accordance with percentage share owning initially paid in foreign currency. Talking about regulations that actually guide funds repatriation. So, and a foreign bank subsidiary or a foreign bank branch may own property for its banking business purpose, while ownership of other properties, including foreclosed and acquired mortgage property, shall be in accordance with the relevant laws of the country. And the National Bank, through directive, may determine the additional minimum conditions and requirements on licensing and license renewal of foreign bank subsidiaries or foreign bank branch, or a representative office of a foreign bank, investment by foreign nationals or foreign-owned Ethiopian organizations in a bank, limits on number of foreign bank subsidiaries and foreign bank branches to be licensed, including related vetting criteria, and limits on percentage of the total assets of the banking system to be owned by foreign banks. And of course, they need to abide by the prudential guidelines published by the regulatory authorities. Cannot be overemphasized. And as regard the employment of foreign nationals in the bank, a bank, after securing approval from the National Bank, may be allowed to employ foreign nationals for the position of Chief Executive Officer, CEO, or Senior Executive Officer positions, or other positions requiring specialized knowledge or expertise through recruitment or staff transfer on the contract basis, with a maximum term of 5 years. The maximum number and or percentage share of foreign employees in the bank may be determined by National Bank Directive. And upon expiry of the 5-year period, the position shall be replaced and filled with Ethiopian national, talking of knowledge transfer. And the service period of a foreign national hired on or assigned through staff transfer may be extended to additional 5 years upon request of a bank, supported with adequate justification and approval of the National Bank. And a bank, after hiring or assigning a foreign national, shall ensure that knowledge and skill transfer to Ethiopian nationals is made adequately and satisfactorily, and assignment of foreign national employees shall be made in a manner that ensures proper transfer of knowledge and skill to Ethiopian nationals, showing that Ethiopia as a country and as a government, they are very big on knowledge transfer, knowledge and skill transfer. So we look at the seismic shift in Ethiopian banking policy, the 180 degrees. In a country where less than half the population have access to banking services. I'm talking about a country which has the second highest population in Africa, okay? And looking at that, the lack of access to finance and financial tools and what that actually purports for the population, okay? And when you see that about 500,000 Ethiopians have existing banking loans, it means they are not well leveraged. So that lack of access to credit facilities. Okay, although there's the argument that most Ethiopians that get loans and they always try to repay their loans, and that is very cultural for them, especially their mortgage loans, and they feel that yes, they don't have to owe when it comes to facilities that they've enjoyed to actually put a roof over their heads. But when it comes to total access to credit, I think that the numbers are very, very poor. So, and look at that's in the impact on SMEs growth, on the private sector growth, when there is a lack of access to credit facilities. Okay, the implications for investment, the implications for overall economic growth. Okay, and also look at the implications for the standard of living. All right, people will not be able to access credit facilities, to be able to upscale, to be able to improve their own standard, their own living conditions. All right, and also look at the implications for education and the acquisition of specialized skills. All right, so when the people don't have adequate access to credit facilities, will they be able to sponsor higher education? I mean, be able to undertake specialized skills, which usually come at a premium cost. All right, and look at the overall impact on the economy too. So when you look at all these existing conditions of the banking sector, of the level of lending in the economy, the level of leverage in the economy, and the impact, overall impact in terms of SMEs growth, in terms of private sector growth, in terms of the quality of life, in terms of the acquisition of education and skills, and even the social impact. All right, so you look at the justification for transitioning, the justification for wanting a shift. Okay, the justification for that seismic shift, that 180-degree turn. All right, that undertaken by the Ethiopia. All right, and you understand that this economic reform agenda is being actually implemented by Prime Minister Abiodun Abari, is something that he has been very keen on, and you understand that competitiveness and foreign investment are things that are very, very dear, very, very important, very, very important objectives meant to be achieved by this economic reform agenda of Prime Minister Abiodun Abari. Right. So you look at the financial sector taking center stage. I mean, finance being the lifeblood of the economy, of course, and the attraction of the foreign direct investment, the enhancement of financial inclusion, as itemized, being an issue, that lack of access. All right, that more than half of the population are not banked, are not covered by banking services. All right, and of course, modernizing the banking sector to ensure its competitiveness. I mean, you look at the adoption of modern ICT tools that would actually enhance banking and make banking for customers a pleasurable experience. Okay. But for a country that is actually transitioning, it's expected that there will be skepticism, there will be pushbacks, concerns, reservations, worries, outright fear of the unknown, of the uncertain. And, parliamentarians actually are worried about the effect of the law on interest-free banking. There are some that are actually big on interest-free banking. They amidst the increasing calls for Sharia-compliant options in the finance sector. So they want to really understand. They are skeptical about the effect. Okay, that how with this rub-off on interest-free banking, will it actually erode? The possibilities and the objectives of interest-free banking. Okay, and of course there are some that are validly concerned about the timing, considering the condition of the economy and political climate of the country. Okay, those who believe that these internal issues that actually bedeviling the nation should be addressed before actually opening up the sector to foreign participation. That banking itself is too sensitive a sector. that the internal issues should be addressed, that macroeconomic imbalance should actually be addressed before actually opening up the sector to foreign participation. And there are also issues regarding the future and survival of small Ethiopian banks, that they believe that they might just get crushed under competition from stronger and bigger international brands. Okay, when those brands come in, and that with the level of competition, the level of the game that these bigger and stronger banks will bring to play, that these smaller Ethiopian banks might just get crushed under competition, and that their going concern objectives might not actually be sustained. So the fear of the unknown, of the uncertain, is palpable, but is it justified? Is Ethiopia not coming late to the party? Should Ethiopia have waited to address its internal issues before opening up its banking sector? Of course, tremendous and commendable progress has been made in addressing the inflation, okay, and of course the debt burden too. Talking about the recent debt rescheduling efforts that proved successful, and without a shred of doubt, more needs to be done to avoid the rebreaking of the dam for Ethiopia. So it must be noted that some considerable work was done on the part of the National Bank of Ethiopia in drafting the banking proclamation in terms of consultation and due diligence, and not just sentiments of trying to have a competitiveness and financial inclusion and all that. All right, so that's just to ensure that it provides a pathway to stability and growth, okay, for the economy. All right, so the stability of the entire financial system is very, very important, okay, for Ethiopia as a country. So in that stead, we have reforms granting the National Bank of Ethiopia more autonomy, okay, and that is just able to inspire confidence in the banking sector, inspire confidence by extension in the economy, insulating the National Bank of Ethiopia. Insulating their decisions, their directives and actions from political considerations and interference. All right, so that is allowing them to subject their decisions to economic data. So the government's determination of lending practices, monetary policy will now shift to market dictated approach. All right, so you have that. The MBE now having a greater intervention and greater influence in the financial system, and determining monetary policies, determining lending practices, and the ability to adjust to global shifts. Right, so there'll be more deference to economic data. So in all of this, with the central bank, the National Bank, yes, which of course is the central bank for Ethiopia, the National Bank of Ethiopia, which is their central bank, in all of this, having more powers, autonomy, independence, being insulated from political interference, so the transparency and accountability must actually come and accompany this newfound authority, very necessary, okay, so that the MBE can honorably and faithfully discharge the newfound responsibility with the augmented authority, all right, and independence. And talking about keeping up with global trends, and our feelers about the crypto setup in Ethiopia is about to change. That might just be the next aspect to be impacted in the financial sector, and this of course will impact financial inclusion greatly, okay. And for crypto, of course, valid concerns as regards the volatility of crypto, because it's actually more of an investment, and that the value of our cryptos can actually be volatile at times, and of course the susceptibility to fraud, all right. And so we look at the impact of our foreign participation. What will our foreign participation bring? All right. So foreign participation will bring better competition, and better competition will bring about better products and services, innovative products and services, where consumer is king, and where consumer, will be we have access to a plethora of services, an array of services. All right. So you also have competitive interests on loans. Okay, and I mean, the interest on loans will actually be competitive because you have brands wanting to outdo one another and bring in the customers. Okay, and you also have broader access to banking services, right? So there'll be broader access to banking services, and financial inclusion will definitely be enhanced, and you have more people that have been unbanked coming under the banking radar. Right? So, and the impact on foreign direct investment cannot be overemphasized. I mean, when you have foreign banks participating in the economy, right, and that will inspire confidence. I mean, in foreign companies, foreign investors, okay, especially those who have affiliations with those banks to be able to put their money in that economy, and so that will be a win-win for the Ethiopian economy, attracting the foreign direct investment. Okay, and of course, the economic expansion is something that cannot be discounted. All right, so you have more participation in the economy by foreigners bringing in more capital, bringing in more funds. Of course, we lead to the expansion of the economy. All right, and more jobs will be created, and with jobs created, you have more infrastructure, the improvement of infrastructure, new infrastructure built. Okay, and it's going to be really advantageous to the Ethiopian economy. So our listeners, when we talk about opportunities in the Ethiopian banking sector, okay, we are not just looking at investors, okay, and how they can get good return for their money, okay, when they invest their funds in the Ethiopian banking sector. Okay, we are also looking at how bankers themselves, how they can really add value, right, to shareholders' funds. All right, so all these are in focus, and at this juncture we have come to the end of this edition of Optimizing Opportunities in the Ethiopian banking sector. I hope we've had an impactful ride today, and please do remember that at Armourgate we are always ready to help and support your organizations to work optimally, creating frameworks and processes for optimization of resources and attainment of goals. You can contact us on Facebook, LinkedIn, Instagram at Armourgate, and you can also visit our website at www.thearmourgate.org. Our email is contact@thearmourgate.org. I hope that the time we've spent together has been rewarding, and I can affirm that from my end it's been a pleasure. Until I come up again in your devices, it's bye for now, and God bless you. Thank you.